Welcome back, everybody. Time for another real estate market update for the Milwaukee area, this time for September and October. We're heading into fall. Last weekend I was swimming in Lake Michigan. I think this was probably the last time for this year. So temperature is changing and the real estate market has been changing in the last few weeks. I'm really excited to share a few things with you today because we are seeing a big shift. Most of this year has been more of the same, extremely competitive market. And that has been changing. We have seen this in the last two or three weeks. It's became very, very apparent. So I want to talk to you about this today. We're also taking a look at the economy, both here in Wisconsin and nationally, and what's going on with the bigger trends that have an impact on the housing market and what we might be able to expect for the next 3 to 6 months. So as always, let's start with taking a look at the latest numbers. And the first thing to mention here is the market has finally peaked out. Usually we see the peak of the market in May, June. This year we saw it very late in July, August. We were not sure when it would happen, but it finally happened and we're coming off the peak now. Numbers very strong for August. You can see here this year versus last year. And word of caution here, last year is not a good benchmark. It was an absolutely crazy year. So inventory is finally up a little bit. We have a few houses for sale and we actually sold almost as many as we have on the market. This is just a crazy ratio. Look back here on the old numbers from 2015. You can see here how much inventory we had and how many we sold in a month. And now look at this ratio. Of course, with that, prices are up to 60 now for the metro area. Milwaukee County, about the same. Prices are up here almost 16% to $220,000 now. And inventory is way up in Milwaukee County. So Milwaukee County, don't forget that includes all the Wauwatosas and Whitefish Bays. That's all thrown in here, 1,300. But a lot of that inventory increase that we're seeing is regular residential sales. And the other part is a lot of small landlords, like one house landlords, mom and pop type landlords, are selling single family homes. They're putting them on the market. So very strong increase here in the city and prices are up about 220,000. We are also seeing a lot of buyer fatigue. So the spring and summer has been so crazy that buyers who have not been successfully gotten a property under contract, they just stepped out of the market and they're taking a break. We'll talk about that a little bit. And also the market in general is getting a little bit less insane. I don't want to use the term slowing down because when you look at inventory and sales, slowing down is not a fair representation, but we're getting a little closer to normalizing a market. So we'll take a look at that more in detail. Milwaukee homes for sale. You can see here what's happening to listings throughout the summer. We have seen a steady increase of inventory in the market. Basically, it doubled since spring in the last 3-4 months. But still a very low level of inventory. So when you hear it in the news that this is happening or that is happening, they're always taking things a little bit out of context. And when you look at long-term averages, normal inventory for Milwaukee is about 3,600 units. So yes, it's great that we're over 1,200 and it's much better than 600, but it is still very low inventory compared to long-term averages. And here's the reason why I said earlier the market has peaked. So we are finally coming down here on the sold to list ratio. So what this number is telling you is how much are buyers on average paying over list price. And that number is usually somewhere in the low to mid 90% ranges, 94, 95%. And I've never in my career seen 106%. We've seen it this year in June. And what that means is, that time of the year, it was pretty much standard to write offers 10% over asking price, waive appraisals, and so forth. And you still ended up with 5 or 10 offers. So we're coming off of that insanity and the market is headed towards a little bit less insane. Let's put it this way, because we're still at 103%. So that's still beyond normal, but it's headed into a more normal direction. Let's put it this way. So I want to talk a little bit about what's happening with buyers or what happened buyers. A lot of you watching this video are actually past clients of mine or active clients of mine. And so maybe some of you noticed that I'm talking about you, but some of the buyers have taken a step back and said, this is just too crazy. We're not participating in this. We have to wait for something to change and to step back. So the Milwaukee market has changed in the last 2 or 3 weeks really fundamentally. It looks and it feels totally different than what it used to look and feel like in spring and summer when we had this absolutely crazy, insane market. And I tried to summarize my observations here in a few bullet points, so let me walk you through that. The first one here is inventory, which has more than doubled in a very short amount of time. So having twice as many houses to choose from makes a huge difference in a market. At the same time, we have quite a number of buyers that got so fatigued that quite frankly, they just gave up and said, we hit the pause button until the market is cooling down and then we're coming back, so we're taking a break. And of course, if you put this together, if you have twice as much inventory and you have a reduction on the buyer side, you see a huge impact because the two multiply on the showings. So even there's more listings now, you see a lot less showings per listing. So it's a lot easier to make an appointment and actually get into a house on the day and time when you want to see it than it used to be just a few weeks ago. On the offers, that means, yes, we have more sales because we have more inventory, and so more inventory creates more sales in this market, but we see fewer offers per listing. So it used to be that you were competing with 15, 17 offers on a listing, and now we are seeing typically 1 or 2 offers, maybe 3 offers on the listings that we had live in the last few weeks. What does that mean for prices? Less competition. Of course, bidding wars come down a little bit, they cool off a little bit, and you don't have to offer 10% over asking price anymore. Maybe you just get away with just list price or maybe a few $1,000s over list price. So we're getting away from that crazy insanity that we had, and the market is getting a little bit more normal. But make no mistake, there is still a huge amount of buyer demand out there, even if some of them have chosen to take a break over the summer. So what does that look like? You have data from showing time. The orange curve is showing you this year's buyer activity. The light blue and dark blue are from the last 2 years. And you can see here the holidays, 4th of July and Memorial Day, they're low points. But the question now becomes, are a lot of buyers recognizing that this is a window of opportunity for them because the level of competition has come down? So they're choosing to come back into the market for the fall season. Then we might see a curve that's going to be up here, or are we going to continue on a traditional trajectory? Then we are continuing to slow down towards the holiday season like we do every year. And that, by the way, is a super interesting topic I want to cover here in just a minute. Now, this is the Case-Shiller index over the last 2 decades, more or less. And so when you're looking at this, it is very easy to see that pattern. Home prices have a seasonality. In spring and summer, prices are always peaking out. And then in winter, prices are hitting the low points. It doesn't matter if you're in a terrible market like here after 2008, in a balanced market that like 2015 here, or if you're in a crazy hot, insane market like we had the last 2 years. You always have peaks in the summer and lows in the winter. The question is just how pronounced are they? So why am I showing you this? Because we are going to see some version of this pan out over the next few months. And we have what I call the seasonal market disconnect. So there is a disconnect between buyers and sellers. They are not on the same page, especially after the holiday break. So what's happening, the whole real estate market is slowing down between Thanksgiving and Christmas, and then after January 1st, buyers and sellers are going in very different direction. And here is how this is happening. The buyers are sitting at home over the holidays and they're talking about buying a home next year. Right now they're busy, so they want to start after the holidays. And January 1st, they're waking up and they say, hey, it's the new year. Let's go on the internet and look for houses to sell. And there is no inventory. And the reason there's no inventory is because sellers are on a very different page. They know that traditionally it's better to wait until spring when the grass is green and the flowers are out to put the house on the market because it looks the prettiest and they think it will sell for the most amount of money. Now, that is not completely wrong, but the reason why it's selling for the most amount of money is because the buyers are building anxiety because they're not seeing many houses coming on the market in January and in February. Finally, a few houses coming on March. And there is a huge level of competition and demand for that because you have so many buyers and so little inventory. And this is what's creating inventory anxiety and what we call FOMO, fear of missing out, which is driving up competition and driving up prices. So every year we see some version of this play out and driving up prices in the spring market. This is why you're seeing that seasonal pattern. So it doesn't really matter if you are a buyer or a seller because there's threats and opportunities on both sides. It's just important you understand that seasonal disconnect that we're seeing every year. As a buyer, obviously it's a lot better to play here where you have the tailwind from the market, competition is getting lower, and price pressure is getting lower. On the other hand, it can be brutal if you are a buyer in this part of the market. On the selling side, there is an opportunity here in spring. If you understand that early seasonality, you know that you don't have to necessarily wait until May or June to put your house on the market. So we are going to see some version of this play out over the next few months. And I think if you're participating in the market, it's very important that you're aware of this. Now for the next thing, I would like to ask you for a favor. There's actually two things that I need your help with. The first thing is that YouTube is incentivizing me to make longer videos and pack them with fluff. And a lot of you subscribers are actually my clients, and I know you're busy and I don't want to waste your time. So if you agree with me and you want me to come to the point as quickly as possible, then please give this video a thumbs up, a like, because that helps with the algorithm and I can keep my videos as short as possible and get to the point quickly. So I'd appreciate if you give it a thumbs up. The second thing is, if you can think of somebody who would benefit from having this information that I just shared, then please feel free to give them my contact information, share this video, have them take a look at this. All right, let's get back to stuff here. The next thing that I want to bring up here is home price appreciation per region across the country, which is far from being evenly distributed. And the reason I bring this up is because you're seeing this more and more in the news because they're talking about lower affordability. And I want you to understand this. When you look here at our region, which is the Northeast Central, we are pretty much in line here, 15.7% here. If you remember, we had for Milwaukee 15.8% increase here. So this is pretty much where we are. This is a lot less than what we're seeing in other markets. For example, here in the mountain region with plus 22.9%. So when they're talking about home prices going up and affordability is coming down, keep in mind there is a huge difference depending in which part of the country you are. And you can see this here. This is the top 20 from the Case Shiller. And you can see here Phoenix, San Diego, San Francisco, Seattle, Tampa. They're all in the 20s. Dallas even. They're all in the 20% increases. Not in the top 20 is actually Austin, Texas. To my best knowledge, that's the most aggressive market at the moment, plus 39% in the last 12 months. So some houses in Austin went up $100,000, $150,000. And affordability is really becoming an issue there. This is very different than what we're having in Wisconsin because we're a lot more moderate here in Milwaukee. And you've seen this chart before. So this is measuring the housing affordability across the nation. And the higher the index is, the better is the affordability. So here, when a lot of foreclosures hit the market in 2011, 2012, affordability was very high. And it's been good, much better than it has been here. But it's been good, but it's been coming down. And now we have a score of 146, but I need you to know this is the national score. And when you actually go on the website of the NAR, you can find the breakdown for the data. And you can see here the Midwest is at 195.3. So we are still somewhere up here. We have very high affordability. Why is that? We have good wages and income, and we have low house prices. What they're doing is they're looking at the median family income and then here at the median price for a single family home. And we're here at 278,000 as opposed to like 515, 315 or 419. So the Midwest here has a completely different affordability. I found some data also from, if I can switch over here, here it is, from the Wisconsin Realtor Association affordability in Wisconsin. And what they are calculating here is they're taking the median family income in Wisconsin And if you use the current interest rates, the median family can afford almost 1.9 median homes in Milwaukee. Or in Wisconsin. So we have very good affordability locally. But when you see the news and it says affordability is going down, then no, they're talking about the West Coast, they're talking about Idaho, about California. They're talking about very, very different markets than we have in the Midwest. Now, here's a little bit about inflation, because that's another thing that keeps on coming up. We have seen inflation in the last months. August data came in with the consumer price index of plus 5.3%, and that is the average of food, energy, and all other items that they're measuring. So 5.3% is elevated inflation, and the Fed keeps saying that this is only temporary and it will come down when the supply chains are getting caught up. We will keep an eye on that, because with inflation, of course, we also have house prices being driven up from that indirectly as the dollar is losing value. Now, another thing to keep an eye on is that the Congress needs to increase the debt ceiling. Otherwise, the US might be in a position where they cannot make payments. And of course, that would be devastating for the economy, our global situation, the US dollar in general. And I'm not going to even try speculate at this moment what this is going to do to the mortgage rates or the housing market. But this is just something to keep an eye on, because I always look for things that could derail the housing market, and this is one thing. I do believe that they are going to reconcile the budget like they do every year, but no, this could be a major issue. Now let's take a look at unemployment. So unemployment rate for the US, 5.2%. For Wisconsin, 3.9%. So we're doing really good here. According to the Bureau of Labor Statistics, we had 8.5 million unemployed and actually 10 million job openings. So we had more job openings than we had people being unemployed. There's just a lot of shuffling going on. People are, post-COVID, trying to reimagine their life, I think, and it will hopefully take a while until we get that sorted out. Another trend that I'm seeing is we have more and more people moving into Wisconsin. Wisconsin is not a classic state where people are migrating to, but we're gaining more and more traction. We are currently number 28 in the US, and that is a huge improvement from 2017 when we were ranked number 39 in the nation. So we're getting more popular. Why is that? Number one, cost of living. You can see home prices everywhere else in the country are shooting up like crazy. So that makes Milwaukee home prices actually really look like a bargain. Cost of living is a big one. The other thing that people are telling me is when they're visiting, they say people in Wisconsin or in Milwaukee are very friendly. So let's keep it this way. I really like that one. Employment is a big factor. Since COVID, a lot of people can work remotely. So it doesn't really matter if you work for a Silicon Valley company. Might as well move to Milwaukee, enjoy the friendly people and the low cost of living there, and do your work remotely. One thing that I'm hearing more and more is also climate migration, because we have the winter here, but everything else, Wisconsin is actually positioned really well. We don't have fires, we don't have droughts, we don't have floods, and those are factors in other parts of the country. The smoke is a big factor. I think that's the number one that I'm hearing from people. They're moving because they just, it's not so much the fires, than it is the smoke that they're breathing all year, and you can't get away from it. Doesn't matter if you have a ton of money, you're still breathing the same air. So Milwaukee and Wisconsin are gaining in popularity. We moved from spot number 39 to spot number 28. And that is a trend that I think is going to continue, and that is going to continue to put also pressure on our housing market, unfortunately, which brings me to the next topic, which is production of new homes. So you've seen this chart before. Here's an updated version. This is the number of homes that we're building in the US since the 1970s. Here's the long-term average. And you can see in the years leading up to the 2008 bubble, we built way too many homes, and they were all sitting vacant and financed with crazy mortgages, people who had no income. And then, of course, the pendulum swung in the other side, and we stopped building houses almost altogether. And now the issue is that we have a huge gap here, and it's going to take us quite a bit of time to get caught up with that. The issue that we have specifically here in the Milwaukee area is that our new construction is only not enough, but it's also too expensive. When you look between $500,000 and $700,000 for a new build, that is not affordable for the majority of home buyers in the Milwaukee area. And for the builders, it's also very difficult because it's physically hard for them to build a house under $400,000, under $300,000 with the current labor shortage and material prices. That is just impossible. So it will take quite a few years before we solve that puzzle and we can create additional new inventory to alleviate the pressure that we have on the inventory. Now, speaking of inventory, the other thing here is forbearance. So I still keep an eye on that. The topic is not as hot in the news anymore, but we're down to 1.86 million loans in forbearance. So that thing is moving in the right direction. We are not expecting a huge wave of foreclosures out of this. There will be a few houses that are coming on the market next year and the year after because of this, but it is just not enough volume to really make a dent in the Wisconsin market, in particular with our unemployment being so low. So I think there's other states that will get a lot more of these when they eventually come to terms. So in a big summary, we're talking about a window of opportunity for buyers in the next few months because the market is a little bit getting less insane. But make no mistake, when you look at the big picture, we are definitely still in a seller's market, in a very strong seller's market. And we will be in this situation for the foreseeable future. So there is an incredible demand out there for buyers right now and also piled up for next year already. And we are going to be in this situation as far as we can see. There's nothing on the horizon that has the power or the probability to change that. Let's take a look at interest rates. So here you have the next 4 quarters all the way to the end of next year. And the average of all these guys comes out to an expectation of slightly increasing interest rates. So at the moment you can get a house financed for just under 3%, but everybody seems to be expecting that rates are going to creep up over the next few months just a little bit. Historically speaking, that is still very, very low because look at these interest rates from the 70s, 80s, and 90s. Now it doesn't really matter if we're 3% or 3.25%. That is just exceptionally low interest rates. And with that, let's go take a look and see what my crystal ball has to predict for the next few months for fall of 2021. So the market has already peaked. We are coming off that crazy, insane level of competition, and the pace is coming down a little bit. We currently see twice the amount of inventory than we have, more than we've ever seen this year. So there's a lot more choices for buyers. And this opens up a window of opportunity. Now the question is, how many of the buyers that have stepped to the sidelines are coming back into the market for September, October, and November? And that is going to largely define how competitive the market is going to be for the rest of the year. Inventory is definitely going to slow down towards Thanksgiving and then Christmas. We see this every year, even though last year we had a little bit of a higher level than we normally would anticipate. So we'll see how that's going to pan out this year. But it's definitely going to be lower inventory towards the holiday season. Sellers will remain in charge. We are in a seller's market and there is nothing on the radar that I can tell you right now that would have the power to change this. And with that, we're also going to most likely see a continuation of the price trends, especially when we're looking at next year's spring market. And I think this wraps it up pretty much. If you have any questions, I would love to hear from you. You have my contact information below on the screen. A lot of people are reaching out to me, send me an email after they've been watching one of my videos, and I love answering questions. You can also put a comment in the comment section below. I usually try to respond within 24 hours. If you want to stay updated, everything real estate in Milwaukee, don't forget to subscribe, and I'll see you at the next one.